Hey everyone, and welcome to this week's edition of Prop Desk Weekly, where we take a look at macroeconomics and try to make sense of them when trading. My name is Alejandro Zambrano, and I've been trading since 2006. So, before we start, as always, I need to stress that trading financial markets unfortunately is high risk, and we may lose all of our invested money as well. Bear in mind, I'm going to give you my point of view on the markets, but this does not make it investment advice. It's market commentary and made with an educational purpose. So, what's going on? Well, we finally got a bit of good data. I'm talking about the ISM services. So they were published yesterday, and we came in at 51.6, which is higher what we saw last month and beat that 50.2 expected number. This is important because 70 to 80% of the US economy is services, although we know that the current government is trying to change that. And what's interesting is that if you look at the subcomponents, new orders and employment all moved higher. Prices as well moved higher, which is an indication of inflation. But overall, a good report, especially given that last week we had US GDP numbers. And as you know, the GDP numbers were really bad. They showed that the US economy contracted. And obviously the US government was, up until recently, Trump has been saying, oh, you know, strong US economy, that's my work. But with this data coming out, he was very quick to blame Biden. And what's interesting is that this is actually quite straightforward. Because of the tariffs, a lot of the producers, a lot of the people that import things in the US, they bought a lot of things from overseas to beat the tariffs. And what happens from an accounting point of view is that the exports deduct from the GDP growth, and that is why it is negative. But obviously this is not great from a political point of view. It is a recession, like a contraction, and if you get another reading, so if you get two of these, then you're technically in a recession. But obviously there's more to a recession than just the GDP contracting. I mean, we have seen this in Europe. Europe has had negative or zero growth for a very long time. It doesn't necessarily change things on the street. The unemployment rate, for example, in the euro area continues to be at very low levels. And it's the same thing in the US, because what we also saw is that the NFPs, I think I dropped the chart, but the NFPs, they actually beat expectations, and that turned things around. And that's good, because before the non-farm payrolls on Friday, we actually had the ADP figures, and the ADP figures were overwhelmingly bad. Instead of being 114K, it actually dropped and just produced 62K. In the case of Jolt's job openings, they have been declining. You can see they were sort of sticky around 7.5 million, then dropped to 7.19 million. So that's a new low here in this series, and probably keep on pushing to the downside. But again, you got yourself a good ISM figures, and you have yourself the NFPs that are very low. Another really interesting number that I like to look at is inflation. So this is from Trueflation, which is a company that produces its own inflation statistics. What is interesting is that they tend to sort of predict where the official inflation reading will be, so they are able to predict the turns. And what's also interesting is that we have seen quite a sharp drop here in inflation. Right now the reading is a 4.6, so it does indicate that inflation is coming down in the US. The question is this though: what's going to happen next? Will inflation pick up because of the tariffs? We don't really know that, but there are signs pointing that that could be true. But if you look at what's happening right now, that's not the case. Okay, so you have okay economy and low inflation, at least right now. So what's the verdict? So the US economy not as bad as expected. So we want to be bullish. We want to be bullish on dips. I'll explain in a minute what I mean by that. What else? We want to be bullish on the stock markets and on crypto because of Trump backing down on tariffs. as some people think that the tariffs on China will be reduced, so they're gonna be at 60% in the next few weeks, down from about 145. As well, Trump said this weekend, at some point I'm going to lower them because otherwise you can never do business with them. Also from China, they said that they're currently assessing proposals by the USA to begin trade talks, but that Trump must cancel, in other words, remove his tariffs first. This is positive. This is good for the world. Also, there are a couple of new deals in play here from the US government. We will see exactly what that actually means. Right now, it will probably just mean that they will have some sort of a general agreement, that they will have some sort of negotiations, because these kind of deals, they take 2 to 3 years. So realistically, we'll still have something there bothering the world economy, but it's going to be hopefully in a better place in the next couple of weeks. Now, we already talked about inflation. There is probably going to be some inflation down the line, but for now it's low, and that could potentially, the low inflation could potentially allow the Fed to cut rates, but probably not now, probably in July. They're still in a wait and see mode, and they are having their meeting tomorrow at 7 p.m. London time, and this is where it becomes a bit more complicated. Will they say, okay, we are moving closer towards rate cuts, and that's bullish for stocks? If they say, actually, we want to wait more because we have indications that inflation will pick up, and that's obviously bad, and that could sink the markets. But overall, in this very complex world, I still think we can be bullish stocks, we can be bullish crypto on dips, okay? And then we'll see over the next couple of months and weeks really how we're gonna do with data. One piece of data that is weekly that you really want to keep an eye on is jobless claims. Last week we had a bad number, first bad number in a while, but if we keep on having these bad numbers, then realistically the mood is going to change quite quickly. So what does this mean? All this information, what does that mean? Okay, so last week we were trading around these levels, and I said a break to the upside is probably going to take you higher. That happened. The price was capped here at the 200-day moving average, and normally if we're capped by that level, the whole market shifts to the downside. So from a longer term perspective, it's a bit risky, okay? But given that we might have some good news between US and China, and again the US economy is not too bad, I would argue that we still want to be bullish between 18,972 and 19,393. So bullish between these two levels, targeting that level, and then we'll see. Probably trade a bit sideways here and then maybe push. If not, if this doesn't hold, we're probably going to trade lower. What could trigger that? Again, the Fed or jobless claims figures. In the case of Bitcoin, so we said a little bit of a break here could push things upwards. That happened. This is what I traded myself. I shared that with you last week as well. Was able to bank a bit on this move. Now the market is just trading a bit sideways, and from the levels I'm watching now, if we continue to trade sideways like this and then we break above 98.95, then that's a very good level, good time to be bullish. So break here, ideally trade sideways for a bit so we can work with a mini rectangle. The alternative is that this does not hold and we go down to support. That would be between 85.8 and 89k. If this is down at that level and this as well as holding at that point, that would make a very good case. In the case of Euro USD, it's a super tricky one, but realistically, in the long run, the way he looks right now, the US economy is going to probably suffer more than what the European economy is suffering. People want to invest, people want to work with Europe, and they're gonna be able to benefit from, you know, cheaper stuff from China, cheaper stuff from, say, Vietnam and many of these places. At the same time, oil prices coming down, so sort of everything is sort of becoming cheaper, and the European government, particularly Germany, is spending more money, whereas in the US they're reducing their government, they have higher tariffs. So overall, I would argue we're still going to go upwards. But this chart, guys, this is the same chart that we've been looking at over the last couple of weeks. We set a break to 112, can take you up, I think we said 119, 122. I want to continue to be bullish, but again, it's starting to get a little bit high risk here, because the longer this stays here, there's going to be a ton of stop loss orders just below 112.50. Okay, so the way I would operate this is very neutral. I wouldn't go out and necessarily buy this, but I expect if we break here, we can have a little slide down here, and if we hold above, we'll push higher. Check out GBP/USD, and check out, I did an update under Think Markets, under tradingview.com, where I talk about GBP/USD. It's forming a very nice pattern with a very small rectangle that could potentially give a crazy good risk to reward ratio. You'll find that if you go to tradingview.com and look for Think Markets, the broker. This is gold. So last week we said look to buy down here, and we had stops here if I remember correctly. So that worked out fine, bottomed out, pushed to the upside. Looking at this today, we took out these levels because we have that Fed rate meeting coming up. I'm a bit worried, and if we have a sell-off and we reach 319, this area here, I think people are going to start to buy again, and I think they will not change their view as long as you trade above 3,250. Now there's a tighter level which is sort of just below this candle here, so down and then buy here. It's just that the problem is that Fed rate meeting, you can have a spike on the back of that. Brent crude oil. So you might remember this a couple of weeks ago, we said a break here will take you down. Well, that was spot on. I hope you were able to capitalize on that move. Looking at this today, you know that they they increased supply and they're gonna increase that starting from June. So they're gonna add another 411,000 barrels per day. And what's interesting here is that we gap because of that. We have not closed the gap, but as long as trade below 62.65, people will probably still sell. We'll probably go 59. Alternative, if we break here, which I don't think we will do, but if we would break here, we could potentially go back towards this point here. So what's happening here with Brent crude oil? They are adding more supply. When you have more of something, the price goes down, right? And they have done a cut of 2.2 million barrels per day. This was introduced, I think it was just around COVID, just on the back of that. And what's happening here is that they're adding back what they're cut. So they're not sort of pushing it 100%, but they're slowly unwinding that. And it's interesting because they unwinded this at this stage, although the world economy is a bit weaker and prices were already on their way down. They decided to do this, and they also decided to do it over the weekend, which is super interesting. I think they're trying to please the US government. Normally they would not do this, because having lower oil means that the world economy is going to be shielded to some extent from Trump's tariffs, and this is good. It's going to lower inflation here, it's going to lower inflation in many parts of the world, and it's going to be cheaper to produce stuff. But again, with that fundamental backdrop, I think that will keep on seeing lower prices. What else? You have Bank of England probably going to cut rates from 4.5% to 4.25. That's going to happen on 12 o'clock on Thursday. I think even if they cut, I don't think it's going to impact GBP/USD in a major way. Rates will continue to be at very elevated levels. What else? Nothing is really happening in the UK economy. It's neither doing really good, neither doing really bad. And inflation is still a bit too high, and that's why, but they're looking to cut here. So I don't think it really matters too much. I think people are more focused on the fact that the big seismic change is happening with the US economy and the tariffs. So I think this is not really going to matter too much. But in that video I published on TradingView, you will see that I talk about a bullish or a bearish scenario, although I think the bullish is more likely one. Both of them have good risk reward ratios. And then you have jobless claims at 1:30 on Thursday. You want to keep an eye on that. And then if you can and you like, we have Canadian NFP at 1:30 p.m. That tends to generate some good volatility in the CAD pairs. And with that in mind, let's see if you have any questions. Let me see if I can load what we need, and then we will take it from there. Just a second, we'll flip back here, and I'm gonna open this on my phone instead. So I'm gonna start on ThinkCapital's YouTube page. Okay. As a very comment from John, yeah, these deals, John says, this kind of deals take time but are very workable. Yes, but just to give a bit of expectations here. So do you guys remember that Trump renegotiated the deal with US and Mexico? This was first time he was a president. And this deal, to fully be implemented, took 3 years. And remember, it wasn't like a huge change to the NAFTA agreement. There was changes to that deal. Obviously now with everybody having massive tariffs, then things go a bit quicker. But it does take a bit of time. I do hope he succeeds, Trump, because if they can make it easier for people to do business in China, and also if it's easier to do business in the US and vice versa, that's really good. Okay, so the ultimate goal, like trade, is good, and that's what we should aim for. So I hope it can make it. The only problem is that in the short term, what's going to happen? I think that's the issue. What's going to happen with all these people that import and export in the US, they have their own businesses, the small businesses, they're going to be impacted. And then you have, for example, people like on Amazon, for example, they're going to put the prices. So they're going to put the prices, what the tariffs are costing. And this spokesperson from the White House said that that's a political move, which, yeah, to some extent is a bit of a political move. But you cannot deny that you're responsible, that you're not responsible for those tariffs, because you are. So that is a bit what worries me. But yeah, hopefully they can work it out. Thank you so much. Sa says that, SA, this video is incredibly detailed and well explained. The way you simplify trading strategies and provide examples makes it very easy to understand. Thank you very much. So if you like it, don't forget to subscribe to the channel if you're not already subscribed, and don't forget to like, really important. Thank you so much, Clock. Oh, thank you very much. Yeah, I like to simplify things. When it comes to trading, sort of the last thing you want to do is to complicate it too much. Ideally, one has a couple of patterns you trade, a couple of systems you follow, and they should be quite straightforward. The problem with that, of course, is that the problem with trading in general is that there's nothing certain about it, right? You can be trading the same setup, many times in a row, and you break even or lose a little bit, and then you have a huge trade, and that covers. That's one way of doing it. At least that's what my trading is, because I'm a trend follower. There are other people, of course, that do the opposite of what I do. So they would trade, more short-term or orders, just one-to-one. So then what happens is that you win, and then you have a massive drawdown. So you need to choose your poison. But yeah, I'm trying to simplify. Thank you so much. So it's really important you like this as well, and share, please. That way we can show the managers here at ThinkCapital that we should keep doing these. Thank you. I don't trade oil. That's cool. Yeah, sometimes we don't even have to trade the market. but it's still good to keep an eye on it. So for example, something like oil, it's good because it's difficult to store, okay? And when you trade the contracts, these contracts, you need to crystallize your loss, okay? So you can't just hold oil, which is interesting. So some of these markets like oil many times paint a better picture of the economy than what financial markets do. For example, financial markets and stocks in general, they tend to sell off. And the stock markets tend to indicate recessions where we usually don't have recessions. So even though you don't trade gold, you still want to keep an eye on gold, you still want to keep an eye on bonds, you still want to keep an eye on copper, for example. Thank you so much, Fight Club. Thank you so much, Crash. So, you know, I was quite bearish on the move to the downside, okay? I thought that Trump would stick more to his positions. I thought that he would crash things a bit more, but he didn't. I took a couple of short positions in crypto, and I made a bit of money on that. And then when the market now moved up, I bought a bit of crypto as well. I made a bit of money on that. So I made a bit of return over recent weeks on the back of what he done, but maybe not as good as I should have. Like, I did want to deploy much more markets to the stock markets, but it was a bit sort of, I didn't feel comfortable. But I don't worry too much, because even if I would have bought stocks, so stocks are something I trade without leverage. So yeah, markets are up with 15% or so. So 15% without too much leverage, I don't think that's too much. Of course, it's good to have it, but it's not like huge. So what I'm waiting for now, again, hopefully they can get some stuff going. From my perspective, the best opportunities going forward is not going to be in stocks. Might be a bit in gold, although I think the best thing is still crypto. I think that with the new crypto reserve, with the deregulation in crypto hopefully kicking in. So he said 6 months of planning. That's how long time they had to implement new changes. We already had a couple of months. I don't remember exactly when the cutoff period is, but it's going to be quite soon. So we'll have some very good news. If Bitcoin trades above its all-time high, I think it will be interesting. Let's actually take a look at the charts, see if I can show you some stuff. So we can take a look at something like AVAX, which is something that you should have with Think Markets and ThinkCapital. I'm not sure exactly if you have crypto as an option, but if you open a Think Markets account, you'll have that option. So this is something where I traded this bit here, bought from here up to here, and this has now been stable since effectively March. It's 12-hour chart. But it's interesting because you're starting to sort of center into this. And if you have a break to the upside here, you have a 33% move. You have some of these, this is like Pepe, where you have a break here. So you break this high and this high here, you have a 36% move. Now everything is going in the wrong direction now. So we're going to the other side of these patterns. I think with Bitcoin, as I said before, if we go down and then maybe bottom out, which means that for me, because I prefer trading breakouts, it's gonna take a little while. It's gonna take a couple of weeks. But at one point, this is gonna go up, for example, and you have that breakout. I think you have other stuff as well. You have sand. You have a few things trading stable. So a lot of people miss that out. We can actually look at historical examples here. So this is sand, where the market was trading to the downside like this. Okay, and then you have, you know, these bargain hunters looking to buy, but it actually, we needed this So we needed this kind of sideways price action, and that is really where it made a lot of sense. So we're in the process of doing that now. It might not just be now, but again, with that deadline coming up for Trump and his government, it will come in the next couple of months. And then when you have these breakouts here, you get this massive move. So if we have, I'm not saying we're gonna have as strong as last time, but if we would have like something crazy like this, you know, you're looking at some really solid risk to reward ratios. I mean, I did like a very good return on this move. Not in sand in particular, but just in general. Let's see if you have any questions, otherwise we're going to wrap things up. Yeah, oil is volatile. So oil is special. Oil sometimes it just delivers like really easy trades, and sometimes it just trades sideways for a long time, and it's just a bit difficult to work with. The best setups I shared with you here. So what I've been sharing here and also via Think Markets, but that I can remember right now in the short term, we managed this bit very well, and we managed this bit very well. This was a bit choppy, we managed this bit well, and then we said the break here can take you down, and then we did this setup here and said this can take you down. So I think the way I look at it, every market has some really good opportunities per year where everything is sort of crystal clear, and that's where I want to go. But again, it depends on how you trade. There are some people that you know, they trade gold 2-3 times per day. They manage that very well, and you know, it's amazing for them. There are other people like me that again that think that, or not think, but know that there are some really good opportunities for each market a couple of times per year, and that's what I'm looking for. The reason why I'm saying that as well is because my experience, because I've been in this industry since 2005 and I started to work for a broker in 2009, is that if you swing trade, your probability of success is higher than if you day trade. How you become profitable? So the trick to become profitable is just to trade a lot, practice a lot. I mentioned it before, but you have the replay function, so you can do a lot of back testing. If you want to save time, try to find 2-3 people that you can follow, a couple of gurus. Spend a bit of time on educational content, so maybe you can even buy 1 or 2 things. It's still worth it, because if you're gonna spend a lot of money on just losing on trading, then it's worth it. But whatever you take, you know, you try to understand and try to be like, okay, try to take the system and try to back test it. Like, has it been overall been profitable in the long run? Okay, that's really important to understand. And when does it work, when does not work? You need to be careful out there as well, because there's some scammers and stuff like this. So some people I followed were good, some other people I followed, they were not very good. Like for example, one guy, he would put like 100K like real money in his account, and then he would like, you know, go from 100K to 200, 300, 400K. But what he didn't tell you is that he would lose multiple of these 100K accounts, maybe once or twice a year. And he would trade like crazy just because from a marketing perspective, it was something that people really liked. Naruto asks, do you trade fundamentally or technically? I say it's a combination. If you know why the market is moving upwards, it's easier to sleep at night. Like if you know there's a fundamental reason. The only problem though is sometimes you don't have a fundamental reason, so you need to take positions before that. But that's where your system comes in play. So I trade a couple of patterns. I trade rectangles, inverse, and regular head and shoulders. I also trade ascending and descending triangles. So I trade these 6 patterns. That's what I primarily like and trade. And even though you sometimes don't even have fundamentals, if you have a holistic view, so you look at many markets at the same time, you can see, okay, you're now having a move in the Bitcoin and you're having a similar move in the Nasdaq 100. Okay, there's something going on there. Or if you're trading FX, Euro USD is moving up and GBP USD is doing the same. Okay, something's going on there. And if you can combine it, with other markets as well, not that you have to combine it, but if you can combine it, it's really interesting. That increases the probability of success. And then if you have your risk to reward ratios in place, you're good. Okay, you're good. You're good. My problem sometimes is that, for example, when it came down to crypto last year, so I got some really good entries. So this was on the back of the election, right? So I bought Bitcoin and I bought a few other things. Some stuff even did 100%. Some stuff did a bit more, and we're talking with big sizes as well. So I pushed all the way up and made some really good money. But then you're still here, and then you're trying to go with the breakout, for example, and you lose a little bit because you always keep on pushing. And then at one point you realize, oh wow, I lost quite a bit of money recently because all these breakouts didn't work out. So that's my challenge sometimes, is that I have to like be more cautious when the trend is over, not getting too greedy. So that's what I do. But overall, I'm doing really well. Okay, I'm gonna go on Twitter, and then otherwise we will wrap things up. X, that's what it's called nowadays. Okay, I'm not actually sure if we're live on that. So I think we're gonna, well, I don't see it at least. All right, we're gonna wrap things up. If you liked it, it sure looks like, if by looking at the comments, really hope you enjoyed it. I hope you have a blessed day and lots of success. Use the back testing function, do your homework, just keep on grinding, keep on pushing, get your system working, and then when your system is working, you need to trust it and you need to use it, and just keep on pushing, and you're gonna make it. Thank you very much for watching, and I hope to see you I'll see you next week. Thank you and goodbye.